it up to YouTube, and apparently what it decided to do was record for 10 hours. And guess what? I ran out of space. Yeah, I suppose that can happen, huh? Well, let's get going, huh? Forex.Today, today. Hey, let me remind you that trading and investing is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. So please always stay humble, focus on the long term, and never risk money you cannot afford to lose. Hey, yo, you know this kid? This is Wayne McDonell. Nice to meet you. How you doing? I'm a currency trader. Been doing this for a long time. Well, I guess over a decade. So I'm here to be your guide and provide feedback and provide some education and answer your questions and do as much as I possibly can in the next 45 minutes. I'm with TradersWay. Yeah, so here's the idea. I want to give you skills and confidence so that one day when you're ready to trade real money, you'll choose TradersWay as your prime broker. And together we'll work on your Forex trading business for many successful and profitable years to come. Isn't that cool? So we'll invest in you today. Hey, maybe someday you'll pay it back and choose us to work as your business partner. Hey, guess what? We're going to cover Forex, energies, metals, indices, binary options, whatever we can. It's approximately London lunch, 2 hours before the stock market opens in the United States of America. And as you see my avatar, I'm on vacation. It's Thanksgiving week in America. I'm Canadian, so I think it's a bit late in the year, but what are you going to do? So I'm in some tropical location, drinking champagne, doing what I'm supposed to be doing. All right, come on. Windows 10 is freaking out. Hang on. I think we'll be good here. I think we're good. All right. So I need to apologize. I'm sorry. I thank you for your patience and stuff, but I need to apologize because I'm on vacation. I'm not as active as I normally am as a trader, and I accidentally got knocked out for 401 pips on that trade of ours. I forgot to move the limit order. So there it is, the end of our trade. Sell Euro USD, knocked out. $4,143. Sorry, my bad. I wanted to get a good trade out of that, but we'll have to live with that. 400 pips. So anyways, good job, everybody. And I forget who said it, but I held that one because somebody said, well, why don't you hold it so we can see it go? I'm like, all right, I'll hold that one. Not much extra work. But coolio. So we don't have that eye candy anymore. So please don't be mad at me, okay? Do you have charts or not? Let's see. No, you probably don't. All right, hang on. Sorry. There we go. So I'll show that again. Boom. Yeah, there it is. Yeah, it's hard. I only have one screen. I brought 2 other screens with me, but I just don't have a desk big enough to set up 3 screens. But as you guys normally know, my travel setup is a triple screen laptop. But anyways, so anyways, I apologize. I wanted at least 500 pips out of that, just for, I don't know, just because. But I forgot to move my limit yesterday. I know we got close yesterday, and I just forgot. Just so many things going on. So anyways, cool. Where do you guys want to start today? Let's do technical analysis. What's on your mind? We can cover stock markets. We can cover commodity markets. We could cover the currency markets. All right, Horace, first one out of the gate. That's his Jamaican blood. Fast as lightning. Yeah, one of the fastest men in the world was from Jamaica, and he ran for Canada. So we'll cover that. That guy was so fast. He broke the world record, and he was slowing down. He held one hand up in the, saying that he was the number one. He was slowing down and broke the world record. That guy was fast. That guy was real fast. All right, so here we are. Does this price look right to you guys? 42.80. Just wanted to double check. Yeah, it could have been in the 80s. Yeah, it could have been. Ben Johnson, I think his name was. Yeah, hey, whatever, dude. I don't care, man. If you're the fastest person in the world, even if it was 1988, even if you're 300 pounds of fat now, if you could say, hey, man, I used to be the fastest man in the world. I easily broke the world record. You're like, good job. Yeah, well, okay, so he was, on drugs. Does that matter? Doesn't matter. Come on. Yeah, the pauses, that's even Steven. So, anyways, can you guys confirm these prices? It's just this is off an old template, and sometimes they're on different contracts. And if I don't need to change all these, I think it's right? 42 seems right. Yeah, that's updating. All right. So let's start with. Well, I guess daily is fine. Here's where we are in the whole grand scheme of things. Right, nice little sideways action. We're inside of a range. I think I would rather mark it like this. Okay, and bring this across. Okay, and you can see it did play a little role in here. 42 though is not super expensive for oil, is it? That looks right to you guys? Something's bugging me about this. I guess it's hard to read. It did dip down there. All right, so I guess that's right. Okay, so we're sort of supportive, and as you get closer and close to 40, you're supposed to be buying. Right? You guys remember the plan? Watch around 40, and maybe, just maybe, one day we get this back up to 65 or 70. And then it'll come back down, and then we'll just kind of move sideways for 4 or 5 years. We need to get Europe back on board before really demand increases. But remember, this is a double dip drop. This is a drop in demand, but it's also an increase in supply. And when we bring Europe back online and brings other countries back online, that will increase demand, which would increase prices. But it seems to me we can add more oil anytime we want. And all we need to do, you don't even need to, there's no sort of mechanism that needs to be put in place. If oil prices get high enough, and it could only be 50 or 60 bucks, frackers just automatically, remember, instead of like one decision-making organization like OPEC, having meetings and they get together and they vote, should we increase supply, yes or no? Now it's a completely independent market where there's thousands of frackers and they're making decisions independently. And they just add more oil even if they don't want, even if it's not wanted. And that'll drive prices down further, right? So it's interesting. Maybe that's why OPEC came about a little bit, just to coordinate things. But just imagine there's thousands of wildcatters in the United States and Canada, but in other parts of the world too, that don't normally produce oil suddenly have the capability of producing oil. And the decision-making process is just some dude sitting on a farm somewhere, and he's like, yeah, I think I'll frack it. Good enough. $50 is good enough. $62 is good enough. And oil's produced, and that should keep prices low for a very, very, very long time. Okay. Look at that history there. It's just amazing to look at it that way. Now, let me ask you something. You see these darker pivots? You see two dark green ones and then two red ones. They seem to be important to price, don't they? So we're actually bouncing on one now. And what will blow your mind is those are monthly pivots. Look where we came down, stop, and then we got that giant bullish engulfing candle. Look at that, right off of a monthly reversal pivot. Isn't that interesting? I mean, boom. Look how big that candle was. Just huge. That's about, what, 24 hours ago we saw that? Huge. And if you trade it on a smaller time frame, the way you play that out is this way. Oh, great. I forgot MT4 does this. All right, let's just get through it. I think this should all be. All right, I haven't updated my fibs, so we'll do that someday. Well, you know, at least let me kill the 0 line, the 100 line. You know, probably the fastest way of doing this is getting rid of the descriptions. I left the 2. All right, let's just do it. Come on, bear with me. Once it's done, it's done. I can't take it anymore, Wayne. I can't take it anymore. All right, we survived it together. Thank you, everybody. All right, so one way to play it out is you fib it, and ideally somewhere between the 382 and 618 Fibonacci retracement, you buy it back. 382 to 618. Ooh, not a perfect, right? Not a perfect drop, but it's something. Right, it looks like it came down to the pivot. So it's really playing the pivots. And did you notice the monthly and weekly pivot cluster? Wow, lovely. Jimmy says it's been volatile. Yeah, yeah. Remember, and I said this yesterday, and I don't know if you caught it. I said this market is trading on pure emotions. That there's no true supply and demand equation or model that would produce any of this. This is just emotion. So yeah, it's going to be volatile, right? I think if you looked at it, how about this logically? If you looked at the fundamentals, and you said, "Wow, there's too much supply. Okay, how about this? Yeah. All right. I don't know where. So, anyways, I don't know how much you caught of oil or not, but let's just move to the next one. I think you caught this fib retracement idea, right? Okay, yeah, let's do USD yen. I'm okay with that. Yeah, the waves are choppy today, so that messes up the internet. All right. Okay. So the 25 target's pretty high up. Why don't I mark that on this? Okay, that's the ultimate area that we're trying to get to, right? Screen's gone again? What? What the heck, man? What's going on, man? Freaky Friday. Except it's not Friday. Okay. Sorry about that. Oops. Move this off screen. Okay, be fine. All right, I'll put this here so at least I can see what you see. Okay, so going back to the top of the market, that's ultimately where we're trying to go. But you can see there's trouble along the way, right? So the first part of this is a pivot point where we're reversing. So let's zoom in and take a look at that. Monthly R2. Monthly R2. That is the biggest, most aggressive target for the month you can have. Okay? The biggest, most aggressive target. You're supposed to get out at M4, monthly M4, if you're conservative. But if you're aggressive, MR2. And that is at 123.45. It's at 123.45. Now you put that over weekly pivots. Last week, not only did we hit the monthly reversal pivot, but we hit the conservative bullish target for the week and immediately dropped. The market still technically is bullish because you look at last week's low, last week's high, last week's close. Okay, and you can see it closed a little bit higher than it opened, so there should be a slight increase in the weekly central, and you can see it did move up slightly, but it didn't act bullish at all, right? You notice how it came up and got caught in a weekly, monthly cluster again? Do you think that's critically important to a double top? Do you think that matters? Yes? Yeah. Yeah. Did it drop more than 100%? No. So I can't make much of a big deal there, except that would scare a lot of bulls out. And that's all that matters, right? Yeah, you can see there's stochastic divergence going on and some other things, but at that point, I don't think you need it, right? You've already made a decision. Um, so this is very questionable. But if M3 is the top of the week, and you can see right here, weekly M3 is this area, and you can see that you could fib that drop as well. If M3 is your target, if M3 is your top, M1 is your target for the week. Okay, and that would suggest a move coming here to 121.77. So let's just say $1.22, right? 122. Why it says, is it better to get it when you have fresh pivots? Well, the way that I prefer is I like to look at clusters of pivot points, weekly and monthly, for example, because they don't update that often. And they're going to be important to multiple people, maybe for different reasons, right? Like if you look here, not everyone is using monthly pivots, but maybe someone's not using weekly pivots. But this area, in particular after a double top, this area is going to be a big area of resistance. So it's more like a cluster. Yeah. It's, another way of looking at it is confluence, areas of confluence. Okay, let me get rid of this. So yeah, I would grow cautious on this one, but you notice that if we finish the week low, that that's not far off of this area, is it? Which would be, I think, the major level of support, right? Right down here, 121.50, really, right? 121 to 121.50, I think is a pretty big key area. Why it's his next buy zone? Yeah, probably be interested at looking at how the market reacts in there. Okay. Remember how USD yen works, and we talked about this not long ago, how it could just move sideways for a long time and then break to the next level, move sideways for a long time, break to the next level. So it could just be forming the next, the next consolidation, right? Look at this, how it just consolidates and then fails and then consolidates, then breaks, consolidates, right? And even break, consolidate, break, consolidate, break, consolidate. It's just how it behaves. Mostly because these countries have very mature bond markets, and very often they can both be strong at the same time or both weak at the same time if it's a sort of a risk on, risk off scenario. And then other times they'll diverge. Okay, depending on which way the wind blows, of course. Okay, you guys want a pound pair or a euro pair or a yen pair? How can I help you? Okay, lots of EUs came out first. All right. Yep, so this moved down to 10, was it 106? Just, wow, I just got knocked out by a few pips. Wow. All right. Big key level there, obviously, right? Let's try this. Okay, and there's our move on the daily. Should probably mark some of this up. Lovely, with your smile so warm and your teeth so green. All right. Yeah, it'll be interesting. I mean, it's one of these things like, is it going to break lower? I don't know. Okay. But you could tell I got out at obvious support. My stop was, I mean, it must have been just right there. Beauty. So now what? Is it possible, guys, that, that we, I don't want it this way, that it heads up from here? Maybe not forever, but for a while? The one interesting thing about this is it's finally in a pure fundamental move. I mean, it really is supposed to do this. I mean, how long have I been preparing you for this big drop? So there, it drops. And really, you guys, you notice how this really dropped around 115, and we're pretty close to 05. I mean, let's just, you know, shaving off some corners here, smoothing off some corners here. This is a 1,000 pip move, right? Okay. So Timmy's like, well, that's what I'm worried about. Yeah, well, this is where, hope is not a strategy, right? So, you lock in what you can, right? Take profit on others. So let's say some of these, you might be holding trades that are up 3,000 pips on the Euro USD, right? So you're not going to take profit on those. But some of these that you're only up 300 or 400 pips, like I did, I think our entry was what, just this break in here, right? Off of this, and it dropped, and then we caught the fib pullback, and okay, so we picked up 400 pips on the second chance move, right? That's the wimpy, right? The loser trade only made 400 pips. That gets us down into support. I'm not going to hold that because, if price comes all the way back to the top of the range, which it could, right? You know what I mean? Right? If you were trading this purely technically, it could go to that top of the range. It could. It doesn't have to, but it may. That's a range trade thing, right? So if you're within this range, right, if you have less than 1,000 pips, you should probably consider taking, but I wouldn't start jamming stops and stuff because it could come here pretty easily, right? It could come here pretty easily. These are all levels of resistance, but it could go all the way to the top. And it's just a range. It's no big deal. It's just, they're there. It's just factual, right? And you could even go into this, it's a role reversal area if you really want to do it. Right? So, do you give up this 250 pip move? Right? Like this little pullback here, remember how we talked about this? I risked, I think, about 130 pips in opportunity cost. This little move from here to here was 130 pips. And I said, well, there's no reason to give up, right? Nothing's changed. We haven't even tested the sell zone. So I stayed short. And we talked about it very openly. And I was worried, but I'm like, look, nothing's changed. Then it dropped. And because of that, right, I made my 130 pips back, but then I made another 100 and something, right? So that's good, but I think we're pretty close to a support zone. Now, it could easily drop to 105.00, not change a thing. And I might have tried to stay in, catch that. But, another thing to look at this is, I use a word for it, and it's not the right word. It's frequency. But if you start studying frequency, you get something that is different. and it's just sort of my personal observation for it. And I think of sound waves like an oscillator, right? Like a true oscillator, sound wave oscillator. Well, in this case, the beginning of this move might have been, 500 pips before you even get a pullback. Then the next one is more like 300 pips and then a pullback. And the next one's only 200 pips with a pullback. Like it's pulling back faster. Each move, like this may not drop at all. Or maybe it just comes down 100 pips and pull back, right? So it can 3, 2, 1, and then, but at some point the frequency is changing from a lower sound to a higher sound. And that's why I call it frequency. But again, if you Googled trading frequency or whatever, that you're going to get a whole different thing, and that's not what I mean. Okay, but it seems to me it's the pips are not as easy as they were before, right? It's hard to make money when it's 100 pips down, 100 pips up, unless you're really short-term, trading, spotting and scalping, which is fine too. So there's my thought on that. How about that? If I was going to sell it again, maybe off the 21, okay, but I recognize that this is supportive, and for all I know, are we going to go back to 115? I don't know, but what if Draghi does something? What if he just, I don't know. It shouldn't, but I don't think it's going to be a straight shot, right? Pao says, what's the difference between a spot and a scalp? Just how about this as a quick definition? If I'm spot trading, I'm generally making trade decisions off of a 15-minute chart, and a stochastic cycle on a 15-minute chart lasts approximately 2 hours, depending on which way the trend is going and which way your trade is going. Okay, sometimes it's a 3-hour trade. Okay, if you trade in the direction of the trend, that it should last a little bit longer. Okay, to me that's a spot trade. Just like it's almost like saying a day trading, right? You're like, I'm making a lot of decisions on a 15-minute chart. And when you pull the trigger, you're probably in that trade 2 to 3 hours if you're trading in the direction of the trend. Now, a scalp, to me, many decisions are being made on a 5-minute, a 3-minute, a 1-minute. So, for example, I spent I think it was about a year trading the 5, the 3, and the 1. That's all I traded until I could master it. Yeah, only a year. Okay, but I learned a lot about how to do it right, but also how not to do it, and then what information's needed to do it better. All right, so to me, if I'm scalping, I set my bias on a higher time frame, like a 4-hour daily, or maybe a 1-hour cycle. Like, for example, I might say, all right, based on the 1-hour stochastic cycle and the fact that we just kicked off a resistance zone, I think we're going to fall for at least 8 to 12 hours. Okay? Hourly chart, right? I think, well, I'm going to get at least 8 candles off of this. It just hit resistance. It just reversed. I got a full stochastic cycle down. Should fall for 8 hours. So how am I going to behave on a 5-minute chart? Am I going to buy it? No. So what I would do is, of course, we don't have a setup like this. And this hasn't reversed, so I couldn't quite buy it yet. But anyways, let's just say that I had made that decision for whatever reason. Then I would drop into like a 1-minute chart and then say, okay, I'm going to sell all high cycles as long as it's hitting resistance. So sort of a rule of mine is that you don't sell high cycle Stokes. You sell at resistance if you have a high cycle on Stokes. Okay? But that's what I mean. So I'll decide on that 4-hour, 1-hour, whatever made my decision. That's my bias. That's my strategy. What's your strategy right now, Wayne? Well, for the next hour, for the next 8 hours, I'm a bear. Based on this 1-hour chart, this resistance that I believe is in play, and that resistance happens to be a bit cluster and a fib level on a higher time frame, and now we have a stochastic cross. It should drop for 8 hours. So dropping into the 5-minute, I'm going to sell Fibonacci retracements with high Stochastic cycles. And that's what I'm going to do the rest of the day, tactically. Now, strategically, all I've decided is based on the higher time frames, it's going to fall for 8 hours. Tactically, I'm going to sell fib retracements at resistance levels with stochastic cross cycles. Okay? That's why I call my book Strategic and Tactical Forex Trading, right? Strategy first, formulate a strategy, and then tactically carry it out. And they're two different things, right? Yeah, that's cool. Yeah, I'm here every day, pal. So we can work on your swing, get your swing trading down, which is good because now your 1 hour and 4 hour daily analysis is better. And then we can work on taking that information and say, well, if you don't have a swing set up because maybe the market's counter trending at the moment, but it could counter trend for 3 days, right? So what do you do while you're waiting for your big swings? Right? We can work on the small light stuff, not the big light stuff. You guys remember that? What was that thing called? Was it Forex Made Easy? Was that a thing, or am I mixing that up? That might have been a book in the beginning. There was a thing where people were spending like $2,000 a month. This was like 10 years ago. And they sold it on TV, I think, for a while. And they had these conferences and stuff. And you got your charts, and it was just MACD. There was no candles, no nothing. It was just MACD, and you had 3 or 4 different MACDs, and they called the big light, strategy where the MACD on the 4 hour, and the MACD on the 1 hour, and the MACD on the 15-minute. If they all went up, you would buy. That was a big buy signal. People are paying $2,000 a month for MACD, and that's all they had was this. They didn't even tell you what time you were looking at. So it was this, like you buy when it's low. And I swear to you, here's a funny story, and then I need to wrap up. This was back when I was running FX Bootcamp, and this was a long time ago. I'm telling you, this was 10 years ago. I mean, a long time ago. I can almost tell you what conference it was. Oh, you know what? I think it was the FXCM Expo. They actually did one in New York City. Was it? I think I'm right. Yeah, New York City. So 2004. Okay, 2004. All right, 11 years ago. So, anyways, I'm at this conference, and I'm with like a group of fellow traders, right? And we're talking about various things, and this guy, no joke, he's on a payphone or something, and he needs something, like I forget what it was, but he's on the actual phone, and he stops and he interrupts us, and he's like, hey, I think maybe you need more quarters. I don't know what it was. I can't even imagine what he needed. Anyways, so he stops and he says he needs something, and we're like, well, what are you doing? And he's like, well, I'm calling Forex Made Easy. It's going to be $2,000. I forget what it was. So the 6 of us spent an hour with him, and we convinced him not to do it. I can't even remember anything beyond that. I can tell you what else we were talking about at that time when he interrupted us, but I can't remember why he stopped us. But anyways, real funny story though. We saved the guy $2,000 because he was going to get himself into some stupid system. So anyways, yeah, there's more to it than MACD, right? Anyways, gotta jump, babe, but I do love you. If you're with family, awesome. And in the United States, it is Thanksgiving week, and pretty soon there's actual holidays and stuff. I don't even know what they are. I'm Canadian. I've only been here 20 years, and I still don't get it straight. But anyways, hey, peace on earth. May the pips be with you. May your profits be above average. And I thank you for your patience this week. Apparently technology is an issue too, but we got through it, right? So like I said, I just don't want to let you down. You make me want to be a better trader, and that's important to me, and you're important to me. Yeah. So take care, guys. Cheers.